What's going on, everybody? Snowski here, coming back with another YouTube video. It is currently Wednesday, June 24th, and in today's video we're going to be breaking down a few very important things, all regarding today's 30-minute power of 3 short that was able to profit me a total of actually 177 3/4 points on NQ. As we can see, bottom left, Trade Debate logo. If you want to see profits, it's posted all over my social medias. But in today's video, the main reason and context on why I actually wanted to make a new YouTube video this week, and actually I wasn't planning to, I was actually planning to wait until next week, is determining 30-minute power of 3 scenarios. Now, today's video is going to be super educational, so I hope you guys stay through the entire thing. But before I do jump into that, if you guys are unfamiliar with who I am or my content and what I use and teach, my name is Snowski. I personally use and teach quarterly theory and smart money concepts, and every single day I try my best to put out free content within Collectors Club, my 100% free Discord server. So link will be in the description if you want to join that up and look at any of the free educational channels that I do have. But what you guys are here for, let's hop into it, right? As a trade review and also breaking down determining 30-minute power of 3 scenarios, there's something super important that I need to touch up on that I didn't necessarily cover as most or more in the last YouTube video. The last YouTube video that I covered was mastering power of 3. And within that video, if you guys are coming from that video, if you haven't, please look into that video first. It's super educational and will help a lot with determining power of 3s as a whole. But 30-minute power of 3, the opening of New York Stock Exchange Open, is by far one of the most important, strategies that we need to be figuring out how to determine, right? Whether it's going to be bullish, whether it's going to be bearish, whether it's going to be high resistance or low resistance, how exactly can we characterize this and figure it out coming into closer on opening? How was I able to short the market today, even with overall a bullish narrative, simply utilizing not only my personal model, the mirror sequence that I've touched up on in the previous video, but as well as determining 30-minute power of 3 scenarios. So let's hop into it. When we're using 30-minute power of 3 scenarios, it all comes down to really the exact same criteria almost every single day, and that is mitigating openings. Every single day, there's going to consist of 3 main openings. You're going to have your true day opening price, your true New York, and your true micro session opening price. Now, every single opening, or New York Stock Exchange opening, your 30-minute fractal power of 3, is going to reference to these true openings and whether it's going to be bullish or bearish and where it's going to draw to before the actual line of trend will move. A lot of people have this misconception that the 30-minute power of 3 has to move in the exact same line as the daily power of 3 trend, and that is simply just not true. Okay, when we use quarterly theory, we pair quarterly theory with with price aspects, smart money concepts, to tell us when price is going to reverse. But what people, don't necessarily find and start utilizing is the fact that true day, true New York, and true micro sessions are reference points to when these expansions are actually going to occur. And I broke this down fully in depth in the previous video, so I would definitely recommend going to that one before today's. But true open scenarios, what tends to happen with 30-minute opening and how we can determine whether we're bullish or bearish is if one opening is mitigated, but the other one is not. Mitigating mean properly manipulated, properly confirmed with a sequential SMT, time-based SMT. So what I'm trying to get at here is every 30-minute power of 3 opening works under the same functions. So repetitive, with the correct understanding, can be super easy to navigate. As taught, 30-minute power of 3 has the likelihood of distributing within the day's trend, but it isn't always that easy. In order for price to ever respect a day's trend, it will draw towards true openings that have failed to be mitigated prior to opening. And I don't want you guys to overcomplicate this or confuse yourself with this. What I'm trying to get at here, and what I really put into perspective in the previous video, is that my trading model, the reason why it's so consistent and really makes a shitload of profit if you listen to the rules, and a lot of you guys that follow my social medias can see this, is that you are not trading unless all openings are mitigated. But there are going to also be scenarios where you can trade the opposing trend of the day with context. So understand, it's not improbable, it's with context. It's with the correct scenarios. So, 30-minute power of 3. There's going to be 3 openings. There's going to be your true day, your true New York, and your true micro session. We can use 30-minute power of 3 to target the manipulation of the day towards true day, if it's unmitigated, towards true New York, if it's unmitigated. TMSO, I wouldn't necessarily say fully, because TMSO can be validated by true New York's mitigation a lot of the times if it's, sequentialized or post, TMSO. But using this information, what I'm trying to say here is, hypothetically, which I guess not hypothetically, literally, let's talk about today, our higher time frame weekly power 3, our 1 hour chart, was looking for proper mitigations to true week. All right, everybody understand this, if you guys have been around my channel for a while, is in order to properly manipulate and confirm manipulation into distribution, because every single day, every cycle is going to consist of your 4 quarters. We are currently in Wednesday. Wednesday is the 3rd quarter of our weekly profile, and between today and yesterday is really the obligation to give us a proper manipulation. Now, manipulation is always, unless continuating trend, confirmed by a weekly sequential SMT on true week. Not always, it can sometimes also be a monthly sequential, as the rule of thumb really is the exact SSMT for the cycle or one above. But what I'm trying to get at here is, coming into opening bell, before 9:30, all we were doing was consolidating. The previous day dumped over 1,000 points, and every single asset failed to do any type of higher time frame external time-based SMT on the low of the week. Okay, so now you're going to start figuring out, why exactly did I short the previous day low? Let's start putting things together. If our higher time frame trend is overall bullish, and higher time frame I'm referencing to like daily. If our daily time frame is overall significantly still bullish, our 4 hours still printing bullish, our quarterly, our monthly power 3s are still hinting bullish, we need to trust the fact that this week, if proven, is going to be bullish as well. But we cannot confirm we're bullish until we have a proper mitigation to true week opening price. This is one of the most misconceptions that everyone just does not fully understand with quarterly theory, is you cannot trade on a high probability basis against mitigated true opening prices unless you're within the correct context. So let's break this down a little bit more. If true week is considered unmitigated, because since the opening of yesterday, we fell over 1,000 points and none of the assets put in any type of weekly sequential SMT above it. We did have one with the previous day, but this was before true week actually opened, meaning true week is a devil's mark. And in the reference of our higher time frames, I'm not looking for a devil's mark of true week, I'm looking for a proper mitigation of true week because I'm still bullish. Meaning, if today opens up and overnight yet to put in any type of SSMT, a weekly sequential SMT, my main objective for today is to seek today properly manipulate for the weekly power of 3 and then catch strength off of that. Now, because I had the correct context within my model, I didn't necessarily need to catch longs from the weekly sequential being put in, as a lot of people call these longs today. And as I will say, they were very clean longs, but I was able to profit before that actually happened. Now, what prompted me to short today? If you guys are coming from my previous video against mastering power of 3 and how I talked about my model called the mirror sequence, my model consists of mitigating true opens to then validate a specific power of 3. Now, if true week lacks a mitigation, the only opportunity is for one of the assets to, desynchronize or decouple, run out the previous day low, form a bullish weekly sequential SMT, and then be bullish. Now we can see, okay, NQ was obviously the asset that ran out the previous day low. YM failing to, only is getting down into EQ of the previous day's range, giving us, discount buying opportunities. You can see, okay, YM runs out the high of the week, which confirms my weekly power of 3, but now that we finally came into opening bell, how did I confirm this? How did I know price was going to fall over today? And that's in result of our higher time frames. before I was able to short today. Now, just for the sake of it, I do want to take off my execution marks just to make it a little bit easier to see. I am going to take this off, and I'm going to put on my, oh, wrong thing, apologies. I'm going to put on my indicators for you guys to see the true opens that I am referencing to on all three of our assets. All right. So we can see here, true day opening. True day opening is our first reference point to our power of 3. Every single day, we are going to consist of an AMDX or XAMD model, and in order to validate a specific daily power of 3, we need to mitigate true day. Manipulate. Properly manipulate, which is confirmed from a DC or a weekly sequential between the weeks, context. So at the very high of the day, what happens? We open up. The previous session high gets ran out on ES and YM, but NQ fails to. We can easily see between quarter 2 and quarter 3, we fail to put any type of desynchronization with NQ, right? NQ does not run out the, previous session high, but ES and YM do. This forms our DCSSMT. Now, I'm not looking at post my execution. Understand, this is the execution that I was taking in the market, in the opening, right? We opened up, we form a DCSSMT. This mitigates true day. But on top of that, we also have a bullish DCSSMT coming into opening bell. So now you're conflicted. Now you're saying, okay, what exactly do I trust in order to seek higher or lower prices? And that's where the weekly power of 3 came in handy. If we know true week open lacks a mitigation, we still need a weekly sequential SMT at the low in order to validate higher prices. We're very likely going to be bearish instead of bullish on opening, but we cannot just assume we're going to be bearish immediately. We need to make sure we still have a proper confirmation, an external and internal SSMT, proper mirror sequence, and then, proper entry. So if we know our DC SSMT, properly mitigated true day opening price, now what I'm going to do for this sake is simply put in replay so we can actually make this a lot easier for you guys to see. So we can see, okay, DCSSMT at the high. We can easily see ES and YN run out the previous session. NQ fails to. Now this happens in around 8:30, which is in quarter 3. So we can see this as a proper manipulation above true day. We open, we accumulate, manipulate DCSSMT, we're confirmed to fall over. Now we start falling over in pre-market, but the opening of 9:30 gives us a retracement. What exactly was so significant about this retrace or opening Judas swing that confirmed lower delivery for me? And that was the internal sequential that we had that confirmed true New York. The mirror sequence. You have 3 true opens. You have your true day, your true New York, and your true micro session. Now, you can always validate any type of any type of true opening with the SSMT or one above. That is just the rule of thumb. I've learned that. I've been using that context for pretty much over a year and a half, and it's never disappointed me. And you guys know, if you guys follow my social medias, it is consistent. So what happens? On the opening, ES proceeds to run out the previous 90-minute high. This 90-minute high is our, considered 90-minute sequential SMT. Now, why exactly is this 90-minute SSMT so important? Because it mitigates true New York. True New York opens, we accumulate, we manipulate above it. ES runs out the stops of the previous 90-minute quarter, forming a 90-minute SSMT. This 90-minute is considered an internal sequential SMT. So now you have a DC SSMT and a 90-minute SSMT. DC validates true day, 90-minute cycle validates true New York, but then you're asking me, okay, what about TMSO? TMSO still needs a proper mitigation, and we didn't have a micro-sequential on opening. We didn't have anything proper to tell us that TMSO was valid for lower delivery. And this is where one key gem that I will pretty much only ever say right now, so you guys better keep it down in your notes, is every true opening can get properly mitigated by the SSMT of the cycle or one above. Meaning, if TMSO references to micro-sequential SMTs, if you form a 90-minute SSMT after post TMSO's opening price, you can properly say without a micro that TMSO and True New York are stacked, validated, mitigated openings. That is one rule of thumb. I will only probably say it once because that is something that I keep for my, inner circle students. But we can see off the validation of the 90-minute sequential, we mitigate TMSO and True New York. True Day is mitigated by the DCSSMT. Our narrative is lower delivery or the previous day low because True Week opening still lacks in mitigation, and it is Wednesday and pretty much the last day of the week in order to manipulate True Week properly for higher prices, which we could see actually YM was the one to deliver, right? Decoupling markets. So with draws in mind of being, let's reference back, previous day low, you can see we go back to the 1 minute, previous day low being my draw on liquidity. What happens? On the time that we formed our 90-minute sequential SMT, stop hunt, bearish order block. What is this? This is considered our bearish CISD. Now, why didn't I short on the bearish CISD getting retested? As I can go back to my execution marks. Oh, did it sign me out? Oh, I'm in replay. I keep forgetting. I'm like, why is it not showing? Now let's look. Why did I not short on the CISD? Simple answer, I wanted to wait for more information. On opening bell, I was super conflicted with opening. But I did state also to, my inner circle students, that I'm very open to both sides playing out, but I am favoring more of a bearish bias traditionally because I want to see a proper mitigation to our weekly opening price. Now, with this in mind, all I simply did was wait for more information. That was the simplest thing. I waited for us to get an additional info, and that additional info was a bearish order block that got confirmed, and we can see the second we closed past the bottom of that previous order block wick, confirming an engulfment. Bam, that was my entry trigger. Took one partial at the low of AM, and then full TP at the previous day low, which confirmed our weekly sequential SMT, and then delivered YM up to the high of the week, confirming my weekly power of 3 profile. Beautiful. Literally does not get any better than this. All right, but I do want to catch up on a few things. Anything that may confuse people. If you're coming from my previous video on my YouTube channel where I covered mastering power of 3, one thing that you can pair easily with this video and the importance of it is the fact that my model, the reason why it's so consistent, and you can believe it whether you want to or not, I literally show proof every single day on my social medias, but what I'm trying to get at here is that the reason why my model is so consistent is because you're not trading every single day. You're trading the days that you pick and choose are the highest probability because frankly, day trading as a whole, is a probability game, whether you like it or not. And if you trade quarterly theory and smart money concepts, you know that we can definitely get very precise about the picks of the highest probability and the lowest probability trades. But how do we pick them? It is about using your 3 fractal true opens. Your true day, your true New York, and your true micro session. Yes, true week as well. As we can see, that was really my POI for today's narrative. But I want to break down that when you're looking for a trade, and you will see every single trade recap that I do, every trade that I post on social media has the exact same context, and that is every true open will be mitigated at the same time. I'm not saying I'm going to have a 3-stage SSMT, but I will say that sometimes like today, you will have a DC in a 90-minute. That will validate TMSO and True New York at the same time because it's confirmed post TMSO, right? It's considered an internal sequential. So if we know this, we can be on the highest probability, the really highest win rate trading contexts, the best narratives possible. Because what you're waiting for, and really what the mirror sequence is it's fractal AMD XX cycles. I want you guys to write this shit down because this is important, and I'm probably only going to do this for free once. The mirror sequence, I'm not going to break it down whole because it's obviously for my inner circle students, but what it is, it's using fractal AMD XX cycles. As we know, every single cycle, whether it's your daily, your 90, and your micro, your weekly, all cycles are going to consist of 4 quarters, and each of those quarters are going to have a function, and they're repetitive, they are fractal, and whatever happens on the higher time frames, well, it can happen on the lower time frames. But how do we properly know that we're going to manipulate and then distribute? Well, you confirm a pivot from M to distribution by a sequential SMT. Not any SSMT, the significant SSMT for that given cycle. So you think of True Day, you realistically want a DC SSMT. You think of True New York, you want a 90-minute sequential SMT, but the rule of thumb is you can use the SSMT or one above. That is always how it goes. With that info in mind, our goal for a precise narrative in what I trade is I wait for every single cycle to be mitigated, meaning we are now in distribution on not only the daily cycle, the 90-minute cycle, and the microcycle at the same time. Day, quarterly theory, refined this as pretty much session sequence in a sense. He didn't necessarily call it that, but it's basically when every single cycle is in the same format or the same function at once. He used to call it QQQ. All right. Now within that, you're waiting for True Day, True New York, TMSO to all fall in line of the same exact distribution function, and then you're finding a precise entry, and you're looking for them to form around your 30-minute and your 10 a.m. power of threes. That is simply it. That is the highest win rate trading strategy you will find out here for free. Please take my word for it. And if you don't believe it, I don't give a shit. But I know this works because I've proved it for over and over and over and over. All right. From there, all you do is find an entry and you target clear draws on mind with proper context, right? We're not gambling. So True Day mitigated, True New York mitigated, TMSO mitigated, proper entry, wait for more information, bearish order block, bam, partial at low of AM, remaining at previous day low. Why? What's the context of previous day low? The lack of a weekly sequential SMT to mitigate true week opening price. NQ is obviously the asset that's going to run it out, with YM being decoupled and following a pretty much different context. All right, boys. So I hope you guys found this educational. I hope you guys found some really good information from today's video and today's trade recap that profited me a very good amount today. If you guys are unfamiliar with my content, please feel free to leave a subscribe, like the video, leave a comment if you want anything after, maybe a new video recommendation, or you simply just want to let me know that you enjoyed the video. I would love that too. If you guys want more content and more free content about quarterly theory and smart money concept, not only does my YouTube channel have a ton of it, but my Discord channel, 100% free Collectors Club, has loads of it. Now, if you're coming to a final close of today, I didn't want to talk about it in the beginning, but 6 days are left within my mentorship for June. My mentorship is going to keep going on, but I have a mid-year sale that is currently almost done, 6 days left, where you can get it for as low as $55 instead of the original price of $75 if you want to get a more educated path of my current strategy and how I actually interpret quarterly theory and smart money concepts. Feel free to, of course, ask me any questions or just take the lower sale price for the next 6 days. But of course, I only wanted to leave that for the end of the video, as of course the free content is the most important. But I am going to be coming to a wrap of today's video. I hope you guys enjoyed your Wednesday. And coming into the next 2 days of the week, I will be updating the Discord with the overall recaps and the Snowski forecast. But coming to a close, as always, wrapping this up, I'll see you boys at the top. Peace.